Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. Today we're going to be talking about Tesla's Q2 earnings. They just reported today after the bell. They missed on revenue and earnings. We're going to look into why they actually missed earnings and if it was really that bad of a quarter overall. So today we're going to be talking about the lowlights from Q2, highlights from Q2. We're going to look a little bit more closely under the hood to see how Tesla is actually doing. We're going to go over some of the Q&A questions on the conference call and see what was interesting about that. There are some things that Tesla needs to do to be profitable and to boost demand in the future, so we'll see what those things are. And we're going to look at how Tesla has positioned themselves after this quarter. But first, please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. Also, to support us, please check out our Patreon page at patreon.com/themarketisopen. And lastly, check out our t-shirts, our investing t-shirt and our Elon Musk t-shirt. Okay, so let's start by looking at the lowlights, the things that went wrong during the quarter. Did Tesla actually miss on the estimates? Yes, they did. They missed pretty badly, actually. However, I think throughout this video, my goal is to show you and to prove to you that a lot of the things that happened in this quarter were actually pretty good, and the quarter wasn't that bad overall. And you'll see that it was worth it for them to miss the estimates for this quarter. And it's not really a miss overall. They purposely sacrificed their estimates on this quarter in exchange for better future quarterly results. So yeah, they lost $1.12 per share on a non-GAAP basis. On a GAAP basis, they lost $2 per share, and the only difference between those two is the stock compensation expense, something that they usually back out. I know Josh hates it when companies back that out because it is a real expense. However, the analysts can't figure out what a company will spend on stock compensation, so the estimates don't normally include that. Revenue was light for the quarter at $5.1 billion for automotive revenue, except that I think this number is actually a little bit deceiving, surprisingly, because I actually normally trust the revenue number, but I'll discuss why I think Tesla's revenue is actually being pushed down a little bit artificially in this quarter. The other thing that was bad about the quarter was that there was no reiteration of the Model S and X coming back to normal volume deliveries. Elon talked about this on the conference call, and I'll address it a little bit later in this video. It's a problem for now because Model S and X do help margins. They're high margin vehicles, and they also boost revenue because they're so expensive per car. But longer term, since they're low volume, they likely won't be a significant portion of the business. Also, JB Straubel, who is the CTO at Tesla, is going to be stepping down from his current position. Drew Baglino is going to be taking his place. JB is actually the founder of Tesla, and there were some rumors of him not being at the office or something, and then they also introduced Drew at the last event. But it doesn't sound like that JB has really been there in full capacity over the last few months, so it's not like he's been super critical for the company at this time. He's going to become an advisor, so he did say he's not disappearing, and he will be staying with the company. And there's also some pretty qualified people at Tesla who can take over and take over that position. The entire company doesn't depend on a single person, although the headlines will make it seem like that tomorrow. So I think Tesla stock did run up a little bit during this quarter, leading up to the quarterly results. I also think that you need to give people who only read the headlines a chance to dump the stock. These are the people who only read CNBC, for example. And then when they're done dumping the stock, people may realize what Tesla actually did this quarter, which I'll talk about right now. So Tesla raised $2.4 billion this quarter. They ended off with $5 billion of cash. That's the highest in the company's history. So that's a pretty big highlight given that people thought that they would run out of cash pretty quickly. Now, they started off the quarter with about $2.2 billion in cash, and they added $2.4. So their operations also boosted their cash all the way up to $5 billion. So they were actually cash positive in this quarter, as opposed to cash negative, which most people think they were. The China gigafactory is on track. The European gigafactory is going to be something that's going to be finalized. However, they won't start on that for another couple of years likely. Model Y is also on track. It's going to be easier to ramp than Model 3. They've said this before because 75% of the parts are going to be the same as the Model 3 parts. And Elon thinks that the Model Y will have the same costs as the Model 3 despite having additional content. So they're going to find a way to reduce costs in the new model. In this quarter, Tesla had record storage production and record vehicle production. They produced they delivered rather 95,356 cars delivered, 87,048 were produced. And they were also able to stabilize international deliveries at high volumes. There were some questions on the conference call about Q3, the next quarter's pacing of orders, and Elon stated that they're going to be higher than Q2. They also talked about autopilot is going to be stopping at stoplights and stop signs. They're running that currently in shadow mode, which means it doesn't really affect anything. It's just sort of paying attention in the background, and it's going to be learning at this time. And I think that's awesome progress for autopilot. Okay, so I wanted to talk about why Tesla actually missed the quarter. And so I'm going to compare the Q2 results with all the previous quarters. I have 6 quarters here, the results, and let's go over a couple of the different accounts that Tesla reported. So Tesla's revenue is a little bit lighter than expected. I think people expected slightly higher revenue, $5.1 billion. That is higher than Q1, but it is lower than Q4 and Q3 from last year, despite having record vehicle sales. However, they have been decreasing the price of the Model 3, and despite decreasing the price of the car, they've still been able to maintain a 19% gross margin, and they've also lowered the price by about $1,000 since this quarter. Service revenue jumped a lot this quarter, up from 492, now it's at $605 million. However, the cost of the service also jumped as well, and I think that is a bit of a problem for Tesla. This is boosting the revenue, but it's definitely hurting earnings. It's not worse or anything than previous quarters. The difference in between the revenue and the costs is about the same as previous quarters. I mean, it is different, but not by much. And I do think that that's something that Tesla needs to work on to sort of make the services revenue get to break even. Now, the energy generation and storage business was sort of mixed. The solar portion of the business did pretty poorly with 29 megawatts. That's down. I'll show you a chart of that later. However, the battery and storage division got an 80% boost to 415 megawatts. So that actually helped them boost the segment from the previous quarter. However, it's not as high as it was or as it has been in the past. Okay, now this is pretty cool. R&D is actually down. This is the lowest number over the last 6 quarters that we've seen. I don't know if that's a good thing or a bad thing for R&D, because you want people working on the cars and on developing and innovating and creating new products. However, perhaps they laid off a couple big names at the company, and those people may have come with big salaries. But even more impressive is the SG&A column here, which is the lowest we've seen as well over the last 6 quarters. And that's pretty amazing, despite the fact that they delivered the highest number of vehicles in a single quarter in their history. So it was even lower than the lowest number we saw in Q4. I sort of had an estimate of that, like my best estimate used this 667 number, but in fact, they actually beat that. So they're definitely focused on cutting costs in this area, which is pretty incredible. Now, they also have this pretty big restructuring expense. I think that was sort of a surprise. The restructuring and other column is supposed to be, or row is supposed to be more of a one-time thing, yet it continues to occur quarter after quarter. Yet it could provide a pretty big benefit for the future, assuming they're restructuring and improving at the same time their factories or some part of the business that will have some sort of future benefit. Normally that goes into CapEx, but if it's, I guess, classified as restructuring, they're going to put that in this row. And lastly, the interest expense increased this quarter. I mean, that is going to hurt earnings as well, and that's because they raised a whole bunch of cash, which will sit there on the balance sheet, of course. But Tesla can afford to make these payments, and investors are going to be happier that they have a much larger amount of cash on the balance sheet, which means that they're further away from any potential bankruptcy or anything like that. Okay, Tesla said their cash position increased to about $5 billion. You can see here it's at $4.95 billion. And that's partially due to a $2.4 billion in debt and equity that they raised in May of 2019, and they also had $614 million of free cash flow in the quarter. And now you'll notice that it's pretty impressive. They showed it based or relative to the December 31st quarter, so going from 3.6 billion to 4.9 billion. But what you don't see, and I sort of just pulled it from the previous quarter, was on March 31st, 2019, which was the last quarter, they only had basically $2.2 billion of cash. So in one quarter, they went from 2.2 to 4.9 billion, which is more impressive than the December quarter. I'm not sure why they showed December in this specific chart over here. They sort of made it underwhelming, but it was actually pretty incredible. Okay, so Tesla provided this spreadsheet for the quarter, which shows their growth in many different areas. The only weak points were mainly Model S and X, and also the amount of solar that was deployed in the quarter. They are boosting their store and service locations pretty heavily. I feel like this is mainly service locations because Elon probably isn't too happy about increasing the number of stores. But that's going to be pretty good, as we're going to talk about later in the video. Also, the amount of storage, which is like battery storage that they've deployed, jumped to 415 megawatt hours, which is pretty crazy. That's a pretty huge jump from the previous quarter, and their target is 2 gigawatt hours for the year. So it looks like there's a big ramp up. However, there's still some way to go before they hit 2 gigawatt hours for the year. Elon was even saying that internally their goal is to hit 3 gigawatts. So it looks like they're still a bit far from that, but they're well on their way given that growth rate. Again, they said that the interest and other expenses increased to 202 million. That's the interest expense here plus the other expense, compared to 123 million in the quarter, so in Q1. So that's 100 million more than the previous quarter, mainly because of currency movements, they said, due to a weakening US dollar, and higher interest rates due to the convertible debt that they issued in the quarter. Okay, now here's a section out of Tesla's cash flow statement, and what I want to focus on here is the depreciation amount. This is another thing that had totally crushed earnings in a bad way. It really brought down the earnings for the quarter due to there being $100 million more depreciation in this quarter than in the last quarter. However, I think that proves to me that they're investing very heavily in new products, new factories, new equipment, for example, in their company. And so this really hurts earnings today. However, but once these factories and improvements and innovations from these investments sort of pan out, along with their restructuring, their $117 million from restructuring, once those all come into play, you'll see a pretty huge benefit. So I think those two things, depreciation and the restructuring, are the key to missing the quarter in exchange for a future benefit, which we haven't seen yet. And so their depreciation increased so much because they're investing huge amounts of money into the business, and they slowly have to depreciate that over time as per the accounting rules. And if you look at Tesla's history, you'll see huge losses leading up to new products. You see like a big loss here and then a little bit of a gain when they sort of stop spending so much and start making a little bit of a profit. But then they have to go on to the next thing, and they need to spend a lot of money, make a little bit of a profit, spend again, and make some money. So in this quarter, it looks like the Model 3 failed us by not delivering a profit. And I think that's what the headlines are going to show. Yet, like, really, with record vehicle sales and record storage sales, like, Tesla sucks. They're not profitable. It's a terrible business. So it seems like Model 3 is no good, and it's time to sell all of your Tesla shares. However, like, wait a minute here. What if Tesla is in fact ramping up two products at the same time? A new car facility, like a new car, the Model Y at Fremont, and a whole new gigafactory in China. And those huge investments in restructuring their Fremont factory to support this have caused huge depreciation expenses for the quarter and going forward as well, because they're going to have to continue depreciating these things. However, we're expecting to see losses. However, we're seeing losses because there's no products yet for sale from these new portions of their operations, because it takes time to ramp up. So basically, their investments in new products and new factories are countering the success of the Model 3 because they're investing so heavily, which is exactly why, like, Amazon, for example, showed losses for many years. And that's exactly what we want to see with Tesla. So I don't think I can stress that enough. You want them to crush the competition. You want them to gain market share. You don't want them to force a profit today and lose tomorrow. I think a lot of people have wanted them to do that for a long time. And finally, in this quarter, we're seeing huge success for Model 3 paired with huge losses because they're investing so heavily in their future business. Okay, so let's move on to some of the Q&A from the conference call. So one of the questions was, why is Tesla continuing to lower the prices of the cars, given that they have a lot of demand? So Elon was saying that they still have to make the cars affordable. The expiry of the tax credit makes the cars more expensive by about $1,700. And they only dropped Model 3 price by $1,000. So Model 3 technically got more expensive, but Tesla does expect the mix to move towards the higher trim because of the way they structured the different product offerings. And they're also making great progress on the cost efficiencies, taking out that cost, which is keeping the margin pretty high, although it will lower revenue if they're going to sell the same number of products at a lower price. Somebody asked about the battery investor day, in which they're going to be talking about the cell chemistry, the module and pack architecture, and the manufacturing plan that has a clear roadmap to a terawatt hour per year. So I think they're going to be scheduling that maybe in March of next year, which I think is a little bit after what we originally thought, but doesn't seem to be a big deal. What's been done for customer service was a question. The best service is no service, is what they said a couple times on the call. They did open 25 new locations on this quarter and more mobile service locations. However, there are fewer and fewer service requirements with the increased quality of the car, and they're also accelerating part shipments to reduce waiting time and give sort of a higher throughput in the service centers. There's also another question on is Tesla still cell constrained at the gigafactory? And they have seen improvements from the 23 gigawatt hours that they've had to 28 gigawatts. So they're saying that they're not cell constrained at this moment, and the cell production matches the production of the vehicles. There's also a couple questions on the vehicle demand for Tesla's products. So the long-term China demand, Elon believes, is about 5,000 cars per week. The plan, of course, is to start off with 3,000 cars per week, and they're not going to be sourcing European cars from China. They're going to be sourcing them from Fremont, at least until a European gigafactory is ready, which will probably be closer to 2021. Elon thinks that the overall global demand is 15,000 units per week for Model 3, about double what they have now, actually. Elon says that demand for Q3 will exceed demand for Q2. I think they already mentioned that it is already exceeding the demand according to their orders, and that's also despite the tax credit going to be being cut in half. So expect quarter over quarter improvements, although Q1 next year will be a tough year. This is a pretty good forecast, actually, and so will Q2. Q2 next year will be better than Q1. I believe that's because they're going to be ramping up. However, I think by Q3 and Q4 of next year, Elon says those 2 quarters are going to be incredible, probably because they're going to have the China Gigafactory up and running, and they're going to be probably launching Model Y around that time as well. The long-term demand for Model 3 is about 750,000. For Model Y, 1.25 million for 2 million total. He says Model S and X is going to be decreasing. However, if you throw in like a pickup truck and a semi, then the Model S and X ends up being sort of a smaller portion of the business. There's also a question, is Model 3 cannibalizing Model S and X? So they're actually not sure. It seems like there is some cannibalization. People are expecting a huge refresh, which I think is pretty annoying. I see that on YouTube all the time. There's a huge refresh coming from Model S and X. Elon confirmed that that's not true. He says that sort of that perception has been holding people back from purchasing the car because they always think that something new is coming. However, Tesla refreshes their cars constantly all the time. So the new S and X are dramatically better than previous ones over previous years, and no one seems to know about that. So I think Elon's going to get to the bottom of this. Perhaps they need to do something in order to spur demand for those vehicles. Okay, now something interesting here is that full self-driving has a component of deferred revenue that's dependent on full self-driving features being rolled out. So I think once they deliver those full self-driving features, they can actually recognize a lot of the revenue that's sort of stuck on their balance sheet, and that'll contribute to higher earnings and higher margins. They say that they can reach 25% to 30% margins. So I think because of that, Tesla's revenue has actually been lower. There's a lot of revenue that hasn't been recognized yet, which is probably that portion of the full self-driving cost that people are paying for when they purchase the car. So I think when we factored in, or when a lot of analysts factored in the average selling price of the Model 3, they didn't really, or they did factor in the full self-driving. However, Tesla sort of pulled part of that out, and that's why we're sort of seeing lower costs or lower prices on average for the vehicles. There's also some other stuff over here that Elon talks about. Basically, getting from 28 gigawatt hours to 2 terawatt hours is how they think about battery cell increasing production to supply the world. So that's pretty cool. Also, they're going to have a little bit of a delay in terms of full self-driving in the EU. I don't see that as a problem. It seems like the regulatory rules are out of date, and Elon's going to be trying to change them, along with all the Tesla customers that are probably going to want them changed as well. So that's interesting, but I don't think it'll affect the company much currently. Now, the service centers is something they talk about. Elon was mentioning that they want the service centers to sort of be like a supermarket of parts. Currently, the parts are all stored in a warehouse, but it would be better if the parts were on the walls of the service center, sort of like a grocery store. So you didn't need to order the parts from the warehouse. You could just take it off the shelf, put it in the car, and then they can restock the parts. And by doing that, they're going to try to achieve same hour service, not just because of the parts, but overall that's their goal. Sort of like Jiffy Lube, but for service. Also, will that cost more money for Tesla? It seems that the CFO was saying that by localizing the parts, it means that they can actually store less parts in the warehouse, and which would actually help working capital. So the other thing that there was a little funny story that some of the parts that were made in China were shipped all the way to the States, to New Jersey, only to be shipped back to China. So some people in China told Elon about that, and he was like, "Yeah, that's stupid. We obviously shouldn't be doing that." So little things like that will help improve Tesla's service and their overall business in terms of cutting out some costs. Okay, here's a couple things that I pulled out for what they need to do, or what they said that they're going to be working on to boost earnings and to keep demand high. So communication about the SNX, or about how good the SNX is, to get the word out. It seems to be important to communicate that to customers. Perhaps they need some sort of a viral video or something to show customers how much better the new SNX are compared to the old one, in order to spur sales, because that's huge margin, huge revenue for the company that they're sort of missing out on, because people just simply have the wrong information about these two vehicles. Now, I think that the services business needs to be focused on a bit. There's at least $100 million that they're losing in there each quarter because the services revenue and cost don't match up, and this is a pretty huge drag on earnings. I think they can pull a lot of costs out of their service centers. It sounds like they're still doing like some stupid things, and they have an idea like on how to bring the parts to the service centers, but there's definitely a lot more that they can do. They could save on the transportation costs and the time, and also have more throughput in the service centers by pushing people through faster and getting more done in a single day, for example. So I think they should continue focusing on this because it is a negative and it isn't sustainable. It's dragging down earnings, and I know Elon doesn't want the service centers to be a profit centers for the company, but at least they can pull more costs out. That said, that they have been opening service centers up like crazy, which does make it harder to control the costs. So nonetheless, I think they have been doing a pretty good job on this. Elon also says that the word of mouth for Tesla has been incredibly good. The retail locations aren't really needed too much. They just simply accelerate the demand, but the word of mouth is good enough. The service center location is pretty important. There's about 4 things that they need to boost the demand for sales everywhere in every geography where they meet these 4 things. Tesla has been doing very well. So that's opening more service centers, making sure that there's superchargers everywhere so that consumers can drive around, financing to purchase the car, and of course the actual price of the car. Of these 4 things, I think Tesla's actually doing the bottom 3 quite well. I still think they need to focus more on service centers. I think that needs the most help. And it is probably one of the most difficult things as well, because it's a bit of a chicken and egg problem. People won't buy a car unless there's a service center, and Tesla doesn't need a service center if there are no cars in that area. So Tesla basically needs to be the first person to take the risk and open up a service center. And I think the company has been doing that. That's why you've seen losses, because they're sort of opening up service centers in anticipation of people buying cars afterwards. So I think these are some of the things that Tesla needs to work on in order to boost earnings and to keep demand for the Model 3 high. So I think the headlines will be terrible tomorrow. I mean, Tesla reported a huge miss on earnings, a huge miss on revenue from the outside. JB is going to be leaving the company. So these are all pretty bad things that the media will pick up for sure. However, I think if you look under the hood, as we did in this video, this company has been investing like crazy. They're going to be poised for a lot of growth. And I think their rate of improvement is actually pretty incredible, and it didn't really show too much on the surface in this quarter. However, I think they're working on a lot of things a little bit more secretive, I guess. They haven't really told us too much about all of the advancements that they're making. But they did sacrifice earnings this quarter in exchange for some big investments into the future. They have so many innovations and ideas in this quarter, and I think you finally saw record results from the Model 3 and their business as a whole, held back by these future investments, which will only pan out probably in Q3 and Q4 of next year, and then so on. But I think those quarters will be incredible, as Elon has said, once these initiatives that they're investing in start to produce vehicles and start to bring in some cash. So right now there's more expenses and there's no cash being brought in for these investments. However, that'll change once they get ramped up. So I think it's amazing how Model 3 now is paving the way for their future business lines. And at a certain point, I think it'll sort of switch over, and they're going to have more cash than they know what to do with a couple of years in the future. However, now everywhere they look, there seems to be an opportunity to invest. So I think the people selling the stock tomorrow, in my opinion, might be correct in the short term, but longer term, they're going to be missing out on something that Tesla has been preparing for. All right, thank you so much for watching. Hopefully you enjoyed this video. Please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. Don't forget to smash the like button and check out our links in the description below. Thanks for watching.